Hey guys, what's up? Welcome to another video. I'm Lori.
And I'm Trevor, in case you didn't know.
So today we wanted to give you our totals for our dividends from January. So we did do a video, I guess, a couple weeks ago, and that was like our whole year total, and actually the previous year. We broke it up into quarters. But now that we're doing monthly, we figured let's tell you how much dividends we actually received in January 2026.
Yeah, we're going into our third year where we're keeping track of everything we're doing, and things are looking up.
What we've been keeping track of, not just the dividends, we've actually been keeping track of our net worth. And how you calculate your net worth is your assets minus your liabilities. So what is an asset? An asset is not a car. An asset is a house, like a property, a rental property, or your investment. So your RSPs, TFSAs, anything like that, or any other kind of assets you have. If you have stacks of gold bars, you know, when you're in your safe in your house or something, that's an asset.
Thing is, they're not really making anything for you by just sitting in your vault.
Well, that's true, but they are, the cost of the value of gold is going up.
Yes.
So if you haven't got gold, get some. But anyways, so that's how you calculate your net worth. So like Trevor said, we have been keeping track of our net worth for the past 2 years, and since exactly 2 years ago, we started January 2024 tracking it. Our net worth has gone up by 14%. So we're pretty excited about that, as long as it keeps going up. So it doesn't matter where you are now, just start tracking it. You just need to get a simple spreadsheet, write down, oh, and I never talked about the liabilities. So liabilities is credit card debt, line of credit, your mortgage, your car payment, anything that you owe. So you just take your assets minus your liabilities, and then you'll get your number. That's your net worth. So if I were you, I would just start tracking it now, and then you can just see your growth over time going up.
Yeah. As the phrase says, you don't know where you're going until you know where you've been.
That's right. You know, you think that you might have contributed a lot into your RSPs, or maybe you don't eat out a lot or whatever. It's like, when you look at the numbers, you know, that's what's going to tell you the real story. So forget trusting your memory of like, oh, I think I put 5,000 in my RSP. No, how about you write it down? How about you check it? Keep track of it, and then you can see, oh, last year I only put this much. This year I'm going to try to put, you know, $100 more or whatever, right?
And it makes it real for you, because you don't know what's going on unless you keep track of it.
Especially with credit card debt. If you have 5 credit cards and you owe money on all of them, you probably have a number in your head that's way off compared to reality. So I would say write everything down. You know, there's no shame in writing it all down, figuring out where you are. How are you going to fix it if you don't know what the real picture is? So just write it down. You might be pleasantly surprised. You might actually say, wow, like, you know, if you have a bunch of different investment accounts too, you add it all up, you're like, oh, I actually have that much. That's pretty good. So it could go either way, right?
Or you're be calling doctor for a defibrillator. Oh my God, did I really owe that much?
That's right.
Oh my.
So don't be that person.
Yeah.
Okay.
I've been that person before.
I think we all have at some point, right? So yeah. That's the thing. It's just, you just work at getting better, right? Just try to make sure those numbers go up, and not the liabilities, but the assets.
Yeah.
Okay, so we're going to tell you our total for January dividends. We're not going to go through every single one, but we do have the grand total, and then we'll give you some of our heavy hitters, or the top dividend producing stocks that we have.
Our grand total at this point, we earned just over $2,100 in dividends last month.
Yeah, 2,164.
Yeah.
So that's what our dividends was for January. So if you are into dividend investing, you know that some dividends pay out monthly, some dividends pay out quarterly. So this is not an exact number that we would get every month. It's going to go up and down. Some months actually go down. You know, if we have more stocks that pay out quarterly and they just happen to not drop on that month. So, you know, so you're looking at the average for the year. So yeah, some of the bigger ones that we got, again, this is also going to change, because these ones are just ones that dropped in that particular month.
We have a lot of like S&P 500 stocks that pay out on a regular basis. So like VDY, we made $147 on VDY last month.
And a lot of these are ETFs too, which I think we mentioned in another video, but the difference, we use the term stocks for all of them very loosely, but technically a lot of them are ETFs. And an ETF is like a basket of different stocks. So versus like, you know, Bank of Nova Scotia, we got $42 last month. So that's an actual stock. So that's one company. But VDY is actually a basket of them. So it is an ETF. But we just use the word stock. So I'm just letting you guys know that a lot of them actually are ETFs. I'm looking down the list. ETFs are a little bit less risky, in my opinion.
Yeah.
So yeah, we got XAW, which is another ETF. That's $119 last month in January.
VUN, we made $52 off of it.
And then REI.UN, which is actually a real estate company. So this is real estate companies is a little bit different. I don't even know if they call them dividends. I think they call them distributions. I'm not sure. But basically that's a basket of real estate funds or stocks, I guess I should say. And then they pay a portion of their profits every month. So that's actually a monthly dividend. Actually, some of these are monthly. So REI.UN. And oh, we forgot to say this, not financial advice. We should have said that from the beginning. Not financial advice. Do not go out and buy these stocks and say, oh, you guys said no. We're not saying anything. We're just telling you what we did and what our plan is currently. It changes all the time. We could change this next month.
We're far from financial advisors and by any means.
Right. So don't take anything. We're just telling us what's happening for us. But again, we could change it next month. So do your own research. So
HDIV, we made about $280 off of that one.
that's actually a monthly dividend. That one and the next one, which is HYLD, which these are part of the Hamilton Healthcare ETFs, Hamilton, Ontario, Canada. So it's a big hospital and they have these ETFs. So it's a basket of kind of healthcare shares. So that's what, and they pay monthly. So they're actually known for dividends. Same with VDY, actually, they pay monthly too. So a lot of these ones are geared for people who want to live off of dividends. So these are not the growth stocks. You know, we have another investment for growth stocks, but so this is geared for dividends. So yeah, and then we have ULTY, which is also a basket, which is an ETF. I mean, we made $122 in that one.
VFV, we made $464 off of that one.
And that's based on the S&P 500, like
Yep.
you said earlier. That's a big,
Yep.
that's more of a growth stock. That's not necessarily listed like as a dividend stock. We just happen to have that in the dividend portfolio, so that's why we track the dividends too. And then HHIS, which is, this is a little bit different one. HHIS is a little bit more risky, and that's about covered calls. So, and don't ask me to explain that because I don't know how. So
And definitely don't ask me.
so we'll just leave it at that. But anyways, we got 276. This is one that I have the love-hate relationship with. With some of these, they are riskier, but they pay really good dividends. Some of these I think are weekly dividends. So they're not something that I would hold for a long time. I basically keep them to get the dividends. And then once I've paid off, once I get enough dividends that covered the cost of the initial investment of that stock, then I don't care, everything's gravy. So even if the stock tanks, the ETF tanks, it doesn't matter because I've already made more in the dividends than what I put in, if that makes sense. So anyways.
So POW, we made $23 off of it.
And POW, I don't know if you know this,
Yeah.
it's a company that owns Wealthsimple, which is a big financial investment company that you can buy stocks and things like
But
that.
I don't think they give dividends every month, do they? Is it every month or every
I'm
second
not sure.
month?
I think it's every quarter, maybe. I'm not
Okay.
sure. Yeah, so all of
Yeah.
them, it just depends. You know, like I said earlier in another video, it kind of evens out. But you know, if you are looking at dividends to live off of, at some point, you know, you'd have to kind of budget for the year if you're getting a lot of quarterly stocks, but versus monthly. But that's fine. You just get out, you know, a chunk at the beginning of the year. And then the last one we already said, which is BNS, which is Bank of Nova Scotia, is $42. So we do have a mixed bag. You know, there's ETFs, there's stocks in there, there's the covered calls, there's the monthly dividends. I think XAW, I think, is only twice a year. So it's just a mixed bag. So really, it just depends whatever stocks you research, you think are good. You know, don't listen to other people unless they know if they're a financial person. So yeah, and we change it all the time. Like, you know, maybe 2 or 3 times a year, maybe 3 or 4 times a year, we kind of rebalance it and make sure that we're actually getting the stocks that we want to get.
And there's other stocks we have too that but we just didn't get them like last month kind of thing.
Right.
You know, it might be every second month or every third month or whatever it is. It may work out to be.
So when we do the end of the month dividend report or video for the end of February, there actually could be a lot of different stocks on here. Although you'll probably see REI because that's monthly, VDI is monthly, VDY, HDIV, HYLD, and HG. So there's a couple on here that are monthly. So they're going to be repeat. But that's the thing about the dividend is, like, you know, the dividends, they pay you, and then if you choose to, you can reinvest them, and then you're buying more, and then the next month you get more dividends. So it is the snowball effect. But then you also want to have the growth stocks, and that's really your bread and butter also. So you kind of, it's good to have like a good mix. So yeah, I guess that's pretty much it.
Yeah, and thank you for joining us once again. We look forward to having you another day, and have yourself a good day.
Keep on investing. Bye.